Hey guys, how's it going? It's Andy from Go Investing. Happy Monday. Ever since I saw this picture of Jim Cramer, who's one of my favorite investing personalities, going trending on Twitter, I've been thinking about the disconnect that we've been seeing between the stock market and kind of what we're seeing in the rest of the world. So instead of me sitting here like I have been for the past month talking about all these reasons why I think the market should be going down, in today's video I thought I'd talk about 5 of the biggest reasons why the stock market has been going up pretty steadily for the past month, even though everything else in the world would say that it should be going down. You see stuff like the stock market had the best week since 1938, and we have tens of millions of people filing for unemployment, and it would make sense that, unemployment's going up. You see stuff that's going bad all around the world, and you would expect that the market's falling. But then you see the headline that we're having the best weeks in over 50 years, and it just doesn't make a lot of sense. So instead of me sitting here and talking about all the doom and gloom things in the world and being kind of a pessimist and a bear, there's been a lot of discussion about stocks only go up, and it's been like that for the past month. So in today's video, let's talk about the 5 reasons why I think the stock market has continued to go up, even though all of the signs, in my opinion, should be pushing the stock market down. In my opinion, the biggest reason why the stock market has been continuing to go up is Jerome Powell and the Federal Reserve has been doing all that they can in their power legally to try to prevent a catastrophe for the economy. One of the big parts that they've been doing has been quantitative easing. One of the first news events that came out as a result of coronavirus popping up is the fact that they were cutting interest rates pretty much to zero. The main reason for that is to increase spending and to promote people taking money out of their savings and not be stockpiling on cash. As things start shutting down and cash is not being transferred, cutting interest rates to zero are kind of a way to push people to start spending. And ever since the virus has broken out, Jerome Powell has been printing money as fast as humanly possible. On March 23rd, Jerome Powell came out and said the Federal Reserve would had no limit for the amount of assets that they're willing to buy, meaning that they would do all that they can to promote spending and pumping money into the economy. Looking at the federal debt, there are some really staggering numbers. The estimates that I've been seeing is that it's expected that the fiscal debt from this year is going to exceed 100% of the GDP for this year, which is crazy to think that we have more debt accumulating this year than we have the amount of money that we've been making, which is crazy to think about. And I did some research, and the last time that happened was at the very end of World War II. So that is pretty unprecedented, but it shows that Jerome Powell and the Federal Reserve is doing all that they possibly can to try to protect the market and the overall economy. Probably the biggest event that's come out of this has been the CARES Act, or as most people know it as the stimulus bill that pumped $2 trillion into the US economy. When you look at the ways that it was broken down, the largest portion, which is around 30%, is going to normal Americans. This is the $1,200 check that people have been getting. And then right underneath that, you have the bailouts for the really large corporations. And when you look at the breakdown, some of the largest percentage for industries has been going to the airline industry, which I've been pretty vocal about. I made a video talking about the airline industry and which ones are my favorite, and I'll link that up at the top right now. So when you see that 25% of that bill, or $500 billion, is going to large corporations, it made the market feel a lot easier about the protection that the federal government is going to be giving to these massive companies. And so when you're gauging the market sentiment, when you hear that the Federal Reserve will be protecting companies pretty much at all costs, that makes it so that the risk of bankruptcy decreases significantly. So for people that are worried about investing in companies that are pretty speculative and kind of risky, the protection that you're getting from the federal government kind of eases that stress. And now there's another $500 billion bill that's going through that I'm pretty sure Trump just signed, more focusing on aid towards smaller businesses. And there's been a lot of discussion about what should designate a small business. You've been seeing these massive companies. There was an article today about the Los Angeles Lakers, the basketball team, getting money from the federal government. There's been some outrage about some of the companies that have been receiving funds that are not going towards smaller businesses and are going towards national chains. And in my opinion, the number one reason why the stock market has continued to go up is that Jerome Powell and the Federal Reserve have been very outspoken about they're willing to do anything to kind of protect the economy and as a result, protect the stock market. So the number 2 reason why I think that the market has been going up is that we've been seeing more hope than we've seen in a long time. The first couple weeks when the virus started outbreaking, there was a lot of panic and uncertainty about what was going to happen. In my life, the time when it became really real is when all of these sports events got shut down. And so you have this shutdown on a global scale, and as a result you have a lot of panic and you really don't know what's going to happen. The stock market tanked for about 3 weeks, and then as you started seeing some optimism and some news stories talking about some of the success stories that we've seen across the world, the stock market started to kind of get on the backs of those news events. And depending where you look, you can see really good news events and you can see really bad events. And in my opinion, it appears like the market has just been focusing on the optimism and the hope side of things. You've seen stuff about countries in Asia starting to open up. You have talks that Europe is getting ready to start opening up. And then you've had Trump come out and have some very interesting tweets about liberating 3 Democratic-run states. And so there's been a lot of confusion on the scientists are saying one thing and the politicians are saying another thing to try to protect the economy. And so there's been a lot of hope that things are going to open up sooner than expected. And it doesn't really matter what you think is the correct way to do it. As someone that's just kind of sitting on the sidelines, if the market is feeling that there's optimism, that's why the market has been going up recently. And so that's why number 2 reason why I think the stock market's been going up is that we've been seeing a lot of hope that we haven't seen for the past month. Number 3 reason why the stock market has been going up is because normal people do not control the market. You've seen a lot of articles talking about how the rich are getting richer and the poor are getting poorer. And during a pandemic like this, the most vulnerable classes are the lower class and the lower middle class. And those are the people that, have no real part in the stock market. Doing research for this video, I was really shocked at the staggering numbers that I saw about the amount of households that are investing in the stock market. I've been pretty vocal on this channel talking about how the stock market is probably the most accessible it's ever been. You can get started investing for as little as $5. So it makes it so that there's very little barriers to entry. But when I saw some of the numbers, I was kind of disappointed. The biggest number that I saw is that 85% of shares are held by the top 10% of American households. And so that makes a lot of sense. They have the most amount of money, they can invest the most. But then I saw stuff about 50% of households have $0 invested in the stock market. And that's really shocking to me. And then when you look at it even further, only 15% of households have direct holdings in companies. The rest of them, the difference between the 50 and the 15%, they have holdings in retirement stuff that's just kind of watching the overall market. So it makes a lot of sense that the disconnect that we're seeing between the stock market really comes because the people that are controlling how the market moves are not really being affected as poorly as they were in the past. Doing more research for this video, I found that 50% of people aren't invested in the stock market at all. And then 9 out of 10 households, the largest investment that their family has is their house. And so that makes a lot of sense about the overall damage that the financial crisis of 2008 to 2009, that recession is also called the housing crisis, and it makes a lot of sense because it did so much damage because most people's money is tied up in their houses. And so when we're looking at it right now and explaining why the market's been going up is that there's a real disconnect between the people that are suffering during this time and the people that are controlling the market. And number 3 reason why the stock market's been going up is because normal everyday Americans are not impacting the stock market really at all. And the number 4 reason why I think the stock market's been going up is that the numbers and the overall impact of this virus has not really been seen. There's been a lot of speculation, but there hasn't been that many set in stone numbers. We've seen these news events about oil prices crashing, we've seen the 14% unemployment, but that has really not affected the stock market that much. And so I've been talking about we have to wait for the overall economic data to come out. We've seen a little bit of information come out, especially in China. We saw the first time that their GDP has contracted in their history, and the stock market didn't really react at all. So while we're still waiting for the overall impact of the stock market to come out, the overall damage that would be seen from this type of economic crisis won't be felt until we see some long-term impacts. The crazy price movement that we saw at the beginning of March, it was a result of panic. And now until we see the long-term impacts and the damage to these massive corporations, the stock market is going to continue to go up, in my opinion. I think this week might be kind of the tipping point to see what direction the stock market's going to go. Companies coming out and talking about, stuff that we've already kind of expected. They're going to be hit pretty hard. The airline industry has been very vocal about the problems that they're having. But this week is when a lot of the massive blue chip companies that move the stock market a lot are going to be reporting earnings. Boeing has their annual meeting where we're expecting to see some really tough numbers. This week we have massive corporations like 3M, AMD, Apple, Microsoft, Southwest, Visa, some of these massive companies that move the stock market a lot. So once we see those earnings, and if we see some very big surprises, especially to the downside, I expect the market to react to that finally. We've seen a lot of numbers come out about the problems that we've been seeing, but the market hasn't really reacted. So until we see some horrible numbers coming from these massive corporations, I don't expect to see anything change anytime soon. And the number 5 reason why the stock market has continued to go up during this crazy time is that the massive tech companies have been doing most of the heavy lifting. For someone like myself that just kind of wants to see what the stock market has been doing at a glance, I usually look at the major indices, stuff like the Dow Jones, NASDAQ, and the S&P 500. I personally like looking at the S&P because, it has 500 different companies. It's more evenly spread out across the market. The Dow is the 30 largest, the NASDAQ is mainly tech focused. But I have been looking at the S&P to kind of get a better representation of how the market's been moving. But when I look at it, I've been kind of seeing the flaws in that logic. When you look at the S&P 500, and if you expected that it's going to be evenly weighted between all 500 companies, you would be wrong. It is weighted by market cap, meaning that the companies that have the largest market cap have a higher weighting than the smaller ones. And when you think about the news stories about the trillion-dollar companies out there, Microsoft, Apple, Amazon, those take up a very heavy weighting when it comes to the overall movement of the S&P 500. And then when you look at the weighting, when I put up that list right now, you see stuff like Microsoft, Apple, Facebook, Google, the massive tech corporations that have been doing very well during this crazy time. Oh, and then there's Amazon that's up 30% year to date that's been really boosting up the S&P. And so as a result, these massive tech companies have been really helping areas like the S&P 500 boost up their numbers. This has been really similar to 2019, where we saw some incredible gains throughout the entire market, and especially in stuff like the S&P. So when you see that the S&P jumped 31% in 2019, you would expect that to be pretty evenly distributed. But then when you look at the heavy hitters in there, Apple was up 81% and Microsoft was up 55%. So this is not unprecedented. For the past couple years, these massive tech companies have been the top performers. And during times like this, where tech companies have been having limited exposure to the downside of this pandemic, I expect this to continue until we see some negative earnings coming from these companies, showing that even these tech companies are getting hit pretty hard. But until we see that, this is the number 5 reason for why the stock market continues to go up, is that the major tech companies are the ones that are holding up the market right now. So let me know what you thought about my 5 reasons. Are there any main reasons that I forgot? I could probably make another video about another 5 reasons, but in my opinion, these are the 5 largest reasons why the stock market continues to go up when everything we're seeing in the world is pointing towards, a recession on a worldwide scale. And the stock market continues to pump up. So let me know what you thought about my video in the comment section down below. If there's a topic you'd like me to go over in a future episode, also let me know. Thanks for watching, stay inside, and I'll see you in the next video.